Welcome to the Voice of 𝘙𝘂𝗋𝗄 podcast. This is a mini edu series, part of 𝘙𝘂𝗋𝗄𝗏 2025. My name is Francesco Burelli and I'm a partner at Arkwright Consulting again. So thank you very much for watching this episode. On this occasion, we are going to look at platform and ecosystem business models. These are business models that have been capturing the attention of media, the industry, and corporate strategists for the last few years. And despite the fact that AI is currently capturing the headline, they are still incredibly relevant as a source of competitive advantage and differentiation within our organizations.
Why this topic matters?
Why this topic matters? Where a value proposition and a strategic positioning are source of competitive advantage and differentiation. And these type of business models are very topical and they've been reshaping part of the industry in various parts of the globe, I would say globally.
What will be covered in this episode?
In terms of key points we're going to touch on is definition, what are platform and ecosystems, and a couple of examples, and why they deliver value and how they do so.
What are the key insights?
So if we look on the slide, here we are referring to published material on INSEAD Knowledge, and this material is also referred to and available in one of our reports from platform to ecosystems, available for download on our website. So as we can see on the left side, we have a permutation on a 2x2 matrix of different business models. So platform, yes and no, ecosystem, yes and no. And we got 4 models. So we have the linear businesses, and linear businesses where the value of the good is in the service itself. For example, stationary purchase out of a shop. We got ecosystems that are not platforms. So the value is from a discrete standalone synergy across multiple firms. For example, in a private equity turnaround, where private equity finance firm, accounting, turnaround specialist companies are operating together on a specific opportunity in order to derive and capture value. And then we got the platform. So the platform business model, the pure platform business model, is a broker. The value derived from a single type of exchange. For example, an online and physical marketplace. We got a multiple to multiple type of relationship that is brokered by a part in the middle that removes friction between these transactions by achieving a lower cost of transaction that leads to ability to capture scale and attract a larger number of buyer and seller. Looking at a platform ecosystem, this is a group of firms with different value proposition. These firms are linked through non-generic complementarities or investment in mutual adaptation. The members have to coordinate in order to create a value proposition for the user. Without this collaboration, the value proposition wouldn't exist. And the significant advantage of this value proposition is that when successful, lead to significant lock-in effect. The cost of switching is high. Let's get into an example. For example, Block, formerly known as Square, is one of these platform ecosystem value proposition. Block, or Square, as it was called, evolved in less than 10 years from being a payment facilitator startup to acquire to platform to a third-party merchant solution for developers to a fully fledged platform ecosystem. As we can see from the graph, we have the seller, the merchant, at the very center of the value proposition. There is a a Square account and a digital dashboard that are providing access to a number of different complementary and yet distinct services, some of which are provided by Square, while others are provided by partners. This type of value proposition is highly evolutionary, evolves over time in terms of content, in terms of reach, and in terms of extent. In fact, the later expansion of Block has been over to the payer side, to the consumer, with a wallet app that is offering a variety of different services, creating synergy between the two and creating the ability to develop an on-us network for transactions. Square is not the only example of this type of value proposition. Here we have Stripe. Stripe operates exactly on the same type of basis, with the additional benefit that Stripe developed complementarity with another similar platform ecosystem, Shopify. So, similarly to the previous case, we have a user. The user has access to a variety of different services through, on one case, the Stripe dashboard, or in the other case, through the Shopify dashboard. And the fact that the two are connected enable further enrichment of the value proposition for the customers that operate within this ecosystem. So acquirer processors are in many cases launching and investing to develop similar capabilities. And this is with the aim on one side to evolve the business model, on the other side to try to position themselves and capture competitive advantage that lowers down the probability of customer to churn by increasing value delivered to customer, by increasing the cost of switching out.
What are the key takeaways?
So, in this episode, we touched upon these strategic opportunities, these business models, and we touched on a couple of examples. And I hope to have provide you an illustration on how this work. Should you like to know more, please visit either in Shared Knowledge, or otherwise you can download the two reports that we publish on this topic from our website, from arkwright.com. So, thank you for listening to this miniedu episode. This is part of MPE 2025 conference.